Good day. Welcome to another session of Money Magnet, Finance Magnet here at Explore Protech YouTube video channel. We welcome you. We hope you're enjoying the conversations that we are having every week. Today we are going to be talking about a matter that is also very critical and fundamental to running our businesses here with you. It's your finance doctor, Dr. Meyer. So today let's talk about raising capital. Every business at any stage of their existence needs capital. Either at the early stages where you need to start the business, to do the prototype, get running, or during the growth stage where you need to scale up. Even at the later stages when you decide to implement your exit strategy, which could be the sellout or the merger and acquisitions. But the lowest common denominator in any business is that any business needs capital. In fact, capital is to business. Capital is to business what literature is to researchers. So what I really want us to talk about today around capital, let's look at firstly, what are different ways we can raise capital. The first one, well, there are many, but here we'll just talk about 6. It's angel investment. This is really when you've got the high net worth individuals who are prepared to invest their money into your business. In many cases, it's at the return of or acquiring some of your capital. That's what angel investors are. Another form of investment is your personal contacts. Now, your personal contacts can either be in angel investors or really people you know who either will invest in your business or have got interest in your business, and you know you can go to them to raise some capital. And again, it depends on the amount of capital that you're looking to raise. Thirdly, venture capitalist. I think this is arguably one of the mostly common spoke of way of raising capital, or the most common one in the world of entrepreneurship, where you really get out there, get venture capitalists who have got the funds and they're interested in seeing if whether the business that you want to start resonate with their strategic intent as a venture capitalist. The fourth one is crowdfunding. This has been in place arguably for the past, has been very popular in the past 5 to 10 years, where as much as you can do crowdfunding for a project, the same way can happen for an idea. This happens mainly for startups. It doesn't really, it can also be implemented for scaling and or consolidating businesses, but in the main, we see this happening a lot in the startup part of the business. The fifth is the conventional one, getting a business loan. Getting a business loan for financing institute can be both tricky and easy depending on the collaterals that the institutions need. It can be that some institutions will need some collaterals for the financing needs that you require. And you also need to remember that for a business loan, there is a cost of financing that is attached to that. The difference between the loan and the venture capitalists here is that with the business loan, you don't dilute your shareholding, but for retaining the control, you need to pay the cost for that. The sixth one will be funding yourselves, really looking into the finances that you have, your own equity capital. For startups, this is probably arguably 90% of the funding comes from your own funds, looking at what you have, selling the assets that you have to start a new venture. What is not really spoken about alone, and I include it here as the 7th one, it's your pre-sales. Now, this also makes a lot of sense for startups where and maybe the best model to use here is the Tesla model. Model, where even before the Tesla hit the roads, the pre-orders for the cars were so huge. So this in a way allows you to fund the business, especially in the startups, if you know that what you're selling is able to generate those pre-orders, so that by the time you launch or by the time you start your business, you've already raised capital from pre-sales. Now that we've spoken about these types of raising capital, I mean, where do you go to find the investors? Again, the list is very long, but why don't you look at again these 6? I mean, you can go to websites like Crunchbase.com, where there is a database, a massive database of both investors. If you want to be an investor or entrepreneurs who are looking for investment, you can go to LinkedIn. I mean, there's arguably more than 250 million monthly users on LinkedIn. Depending on the filters that you want to use when you get to LinkedIn, you might as well find for yourselves investors for your business. And again, aligned and or dependent on the stage of your business. The third place, you could go to places like WeFunder. I mean, WeFunder is a crowdfunding. The only difference that this one is exclusively for investments, which is where you as an entrepreneur, you want to go or you want to be in that space. The fourth one is the Pitch Investor Live app. Now, this is where you give it an opportunity to do a real-time pitching to the investors. Try it and see if it works in the line of your business, where investors, depending on who you want to invest to, can actually listen to you live and arguably probably get a quicker turnaround response from your pitch. And number 5, go to platforms like Gust platform. I mean, you've got about just over 200 countries that you can access to source funding, dependent on the industry and or the service that you're selling. And finally, you can register yourself with MicroVentures, where again you'll find investors who are looking for either late stage or early stage opportunities for entrepreneurs like yourself. Now, maybe let's just talk about the quick tips for preparing yourself to talk to investors. Because when you're looking for investors, remember, as much as this is a business for you, investors are in business of looking for opportunities for their money. So what are the 10 things that you really need to do when you're preparing yourself for for investors who you want them to fund your entity? So number 1, you need to have a list of investors. The list you need to work on about a 1% conversion rate, so to speak. So if you're looking for one investor, be prepared to have a list of about 100 or more investors that you need to talk to about your business, about your investment. The second thing is when it comes to investment and funding seeking, it is more important to build a relationship. And you need to start this very early. If you're looking for somebody's money, who they need to trust you that what you're looking for, what they have, is aligned with the strategy and what they invest in. You need to really work on building relationship and rapport with as many investors as possible. And number 3, just remember that the investment community and the venture community in particular, it's quite small. It's not as big as we think. So it's very important that we don't burn bridges. Or when you're going and pitch in another venture capitalist or another investor, you start, in the lack of a better word, bad mouthing your previous experiences. It's a very small community, and there is a high likelihood that these investors do meet and do chat. So it's very important to take care of that. And number 4, You need to build passion into your pitch every day. I mean, there's a course that we do that is not a center of today that we call Passion to Paycheck. You need to bring energy and life into your pitch. If you don't believe in your own pitch, why should I believe in it? Why should an investor believe in what you don't believe in? And remember, what drives these things a lot from investor point of view, they want to see the passion that you're driving this business that you want to start, because they can at least know that you have a skin in the game. You're not just looking for their money, but your heart and soul is in this business. Number 5, do not expect that just because you made a pitch once, then you'll get a response. Sometimes you need to follow up with investors to find out if they've made their decisions. I mean, this is not a standard rule, but I mean, it's arguably said at least 3 times follow up to get the feedback. And remember, the feedback might not even be what you're looking for. But what is important is that you need to get the feedback from the investors about the pitch that you did for funding. Number 6, that links very well to number 4, that says build passion into your pitch. You need to practice your pitches. Not 2 investors are the same, and not 2 pitches will be the same, even if are done one after the other. So practice your pitch. In fact, what I probably need to say here, don't read in your pitch. You need to be speaking your pitch like you're breathing. Practice your pitch, perfect your pitch, so that when you get to the investors, they know and they can see that you know what you're talking about. Now, this is very important. Do not run your business like raising money is the only objective that you are only after. Your business or your idea has got other things that are as important as raising money. So do not make funding or money as if is the all and the end of it. It's the key thing, but it's not the only. So please remember the passion behind your business, and raising money, it's not the business, but it's just part of that business. And number 8, don't be desperate. Don't accept money from every investor that you are going to talk to. You need to have your own pre-qualification of investors that you firstly are going to talk to, or investors who you are going to consider to support or to invest in your business. And I mean, this links to number 7, where it says, don't run your business like raising money is the only objective. So you need to pre-qualify your investors so that you're very clear which investors you're prepared to either go and talk to, or which investors you're prepared to allow them to fund your project. Number 9, you need to decide upfront that during the pitch, are you going to be selling the metrics, or are you going to sell the bigger vision? I'm more inclined to say you need to always lean towards the latter. Rather sell the bigger vision, because it is the vision that resonates mainly with the investors than metrics. They've seen so many of these metrics, but your vision is unique, and that's what might just give you the funding that you need to launch. And lastly, draft a pitch deck right after raising a round. So when you're done with this pitch, take the notes, go back and prepare for the next. This is where number 6 comes in, practicing the pitch. I hope you found value in this matter about funding and raising funding and these minor tips. I'm your finance doctor, Dr. Meyer, here at Explore Protect YouTube channel. If you are new here, we welcome you. Please subscribe to this so that whenever we bring these matters to you, you can be informed. Comment on these videos, engage us so that we can have a more fruitful conversations around the matters finance. If you need to get in contact with me, please click in the links below where you can find me either on social media and or the email. It has been a pleasure to have this conversation with you. Until we have another conversation next time. Have a